Hello, this is Eli Levy with Cannon Trading. Today we're going to talk about silver contracts. Please pause your screen and read this disclaimer. A few days back, I posted a weekly video and I spoke about the silver contract and I showed you that we were in a sort of a parabolic move going upwards. And I explained that this could go in any direction. And it ended up the contract ended up retracing and falling. Fell about 30% on Friday, 30 some plus percent. Yesterday it was also down. And 2 days ago it was also down. And then yesterday it started climbing over 10%. And I gave you some levels. Obviously, these levels had to be uh, adjusted. And the levels I gave you, I remember, were the 50-day moving average on the weekly day chart. On the weekly chart, right now you're looking at a daily chart because I want you to see more of a short-term range. And the supports that I remember I gave you were somewhere around $75. So it's based on Fibonacci numbers. Now, what you have to take into consideration, you have to take longer term ranges and shorter term ranges. So, long term would be the all time range of the contract, shorter term would be whatever you decide. So, the Fibonacci's I usually look at are all time ranges and shorter ranges. And if you're looking at the shorter ranges are the white lines and the longer ranges are the green lines, okay? So this would be a 23% retracement, this green line, and this green line would be a 38% retracement. Now, usually according to the Fibonacci rule, the closest number to one is 61.8. So a retracement should somewhere come around about 61.8%. If it falls 38%, that's actually a healthy thing for a retracement. If you recall, the S&P fell, the SPX, they fell last year was like around April time. The market retraced, if I recall from my numbers back then, it was like 23%, which I thought was too little, but that's what it was. So 38% is considered good. A real retracement, though, could be 68%. So if you're looking at this, and I pointed it out, and if I didn't, I'm pointing it out now. The first 61% retracement comes around $47 on the green lines, right? And the 76% retracement comes out at $27. Why am I showing you this? When you enter a trade, and I've seen this in stocks and in futures, believe it or not, they could really retrace 78%. It happens. Sometimes they could even retrace more, but that means that it's probably just done for. But these retracements can be seriously hurtful. So when you enter a trade, you have to take into consideration how much am I really risking? Okay, you also have to know how your stops work because they're not all the same. You could contact me if you need a can in trading, and I'll help you out with that. So we did retrace. We retraced 38% on the longer term range, and on the shorter term range, which is the white lines, we retraced between the 61 and the 78%. And that's usually how it works. It could be either or. It could be at the 61 or at the 78% or between the two of them. Now I'm going to go deeper and show you a 5-minute chart, and you're going to see how this played out, which is pretty interesting. All right, so the contract hit a high, 121,785, and started falling. The white line, first number we said is 23%. We almost reached that number. We went back up, found some sort of resistance, came back down, again back up, resistance. But look at that. This is a 23, decided to halt here, right? Falling through it, going all the way down to the 38% retracement. What happens to a support line when it's broken? We test it to see if it's going to be resistance. It goes all the way back up more or less to that resistance level, finds it as a resistance, falls back down to that 38% level, breaks it all the way down, goes down really harsh motions, one after the other, just breaking level after level. There was a little bit of a stop here, but they decided to fall and they went all the way down. Look at this to the 38% retracement, green line of all time numbers. So that's where they found support. And that was also around the 61% on the short term. Okay. They're going back up to what was supposed to be the last support. And that ended up being a resistance. You see that? Back down to the next support, back up to that resistance area, back to that 38 on the dot. Again, one, two, moving back up. And here, this is what I call shakeout. They broke that 38%, got as many people out as they could, and then they started rallying back up, coming back down to where? To that 38% retracement. They found the support and going back up. Here we are again to that next resistance. Now they're hovering above that first resistance, which is sort of turning into a support. So now you have numbers. You could see these numbers. I'm not a magician. These are Fibonacci numbers. The market uses them. Even if, okay, it's a myth. Fibonacci is a myth. But if everybody uses the myth, then the myth has something to it, right? And we could go based on that. So when you're entering day trades, you could actually kind of figure out how much your risk is because you're saying, okay, I want to buy this contract at around the 38% retracement. If it breaks below that, I'm going to get out. And then you actually have to decide how much your risk is, how much you're willing to risk. You see, they do shakeouts, and they did that right here. Whoever got in it to 75.75, they went down all the way down to 71.20. So you could have gotten shaken out, even though you were right on the trade. You have to figure out how these things work. One of the things I like to do is when they come to a low, you see this? I look at the RSI on different time frames. This is a trick I use. You could use it when they come to a low, here they gave us a low. You see here, the actual price movement was lower than the last one, but if you look at the RSI, it's higher. The price movement was over here low at 75, low at 71.20. That means that this RSI should have been lower than the last low, and it wasn't. It was higher. That usually gives me an indication, okay, they are starting to support this. That's something that I use. Don't take it for granted. Obviously, you have to know how to use these things. And they sometimes they don't work, but it's just some sort of indicator that I use. Hope you enjoyed this video. And if you need any help learning a little bit about this some more, contact me at Cannon Trading. Have an amazing day.